The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at this time, 11 o'clock till noon. And thank you to all the great hosts that we had today. We had, starting off with John Logan back again, was sounding better than ever, and great to have him with all the different tools that he has and showing those TAS parameters. Terrific. Hey, what's more important is that Larry's taking a little bit of a break, and I did his show today. That was the 9 o'clock show. Then 10 o'clock, of course, you get Tom's update, and Tom's son, had the next hour, 10 o'clock to 11, and I'm coming in 11 to 12. And of course, today, options hour. Wow, what a day for have options hour, because this is a very important period right now, bumping up against resistance in some areas, breaks out in the QQQ recovery high. I mean, this is a very important period. So we got programming all the way through. You got Steve Rhodes, you've got Dave White, you've got Tom Bryan back again. Then you've got Andy Hecht. Full program today. Dow's at 59 at 17,088. S&P is struggling. It's unch at 2104. Comp index is down 1 at 5125. Gold is down sharply. I discussed it during Larry's show. Did a whole bunch of stuff with the gold, a relationship of gold to the dollar. There is that inversion, the not quite a mirror image, but definitely the dollar is improving a lot. Dollars looks like it wants to make a new leg up. It's up 43 at 97.43, and you've got bonds right now down half a point. TLT is down 48 at 121.47. I think that 121 area is really important to hold in the bonds. The E-minis right now up to, I had shown this earlier, I had shown the 10-minute chart. Let me just get back to this one here, the naked chart. Nothing but the Chapman wave and a couple of trend lines at left side, right side, price, time match right there. Went right to that low within one bar and about a point or so of the low from the 120 time period on the second at 2087.75. Went down this morning to 2089. $1.25, just missed it, and ran up peak ABC. And there was an arch formation. I raised the arch formation, and we've made that D. Now, 2100 in the 10-minute chart that I'm showing right here was the recovery high just recently. That was at 4 o'clock, just before 4. It was like 3:20 to 3:30 yesterday, and the E-minis ran up to 2100, powered right through the left side, right side resistance. And that was around at about 2090, just zipped right through and went to 2100 round number. Now we're going to be watching that closely, because sometimes a century level round number exact without 25 cents either way can become a resistance area. And I've got the Chapman wave interpretation of Elliott wave right now, which said that was an Elliott wave 5. And basically you can think of this kind of as a flat coming consolidation. And now we've just had a little mini run up to Chapman wave peak D. So we got parameters are real easy. Any close on the 10-minute chart above 2100, start looking at your 120-minute chart. Why? Because the 120-minute chart had a single leg A to the upside and then pull back, not very sharply, but it pulled back. And that could have become a G. It becomes a B. There's no other way to count it if you start to trade above 2100. Just make it as simple as you can. Okay. Now, a couple of things that we need to look at here is the VIX index. VIX index right there. $VIX, and there it is. Whoops. $VIX.X. And there it is. See, trading at 14.19, up 4 cents, a little miserable 4 cents. This is just saying from the weekly chart that it's kind of stuck here. That might intimate that this leg 5 in Elliott wave in the Dow monthly chart is not going to allow all that much to the downside in terms of retracements. One of the reasons why we have long positions, we've got some short positions. Actually, it's funny because the short positions at this particular point are acting quite well to the downside in this market. So we've covered a whole bunch of things. Let's go straight to our first caller. We've got Mark in Fort Collins. Mark, how are you?
Basil,
Yes.
how are you?
I'm well, thank you.
Well, this is one pushing up market, isn't it?
Well, you know, this is the market that once the wind is behind the market, meaning the Fed is behind it, and
Yep.
it is more pure oxygen rather than any other kind of wind.
Right.
This says to me that probably the low that we saw in August is a very important low, and that we're looking at a situation where perhaps this is not the time to get too aggressive to the short side, although if you have technical indicators, you certainly should take your short positions, but you've got to be prepared that fund managers are, well, think of it this way. If interest rates remain this low, then the mantra of where are you going to put your money becomes even more viable. And that says that the stock market is probably the only place that you can, stock market and maybe some real estate are the only places that you can really see capital growth rather than the safety of, say, munis or something, which at this particular point, I think is still a place that one can consider, but you got to be very selective because slowly I'm starting to see signs that some municipalities have begun really overspending. So, yes. So you'd like to look at?
Well, I'm kind of short in 3 different areas, and you can look at as many or as few as you want. In order of the ones I want to look at the most are the XLV, which
Right.
I'm short, the IYR, and the SMH, which I know that in your report we were kind of short in that by virtue of another position, but it got stopped out. So just let me know what you have time to look at, and we'll go from there.
Okay, so 7704, the IYR. I just wanted to update it and say that I'm going to, at least for now, call it E in the daily and C in the weekly. Okay, now let's go step by step. You mentioned the XLV, and that is the S&P Select Healthcare Spider Fund. What's really important about this particular fund is that it has made, I don't really have any other way to count it. I do believe I've got a peak F in the monthly chart. I've got a D already with a Chapman wave 2-bar reversal. It has already fallen from 77.40 down to 56.63. Any way you slice it, that is a very sharp decline, 11 points. So that's like, I'm just guessing 14% or something like that. So now what the situation is that it's rallied. And what we've seen is when I draw a rectangle formation, let me just do this one more time here, make it a little clearer, a little bigger. It has just snuck momentarily above the left side high of the 17th at 73.26. It went to 73.00, and it hasn't broken above it. And it had a full complement in this particular case of that rectangle formation that I say, when you got something that looks like a flag pattern, you can get a Chapman wave inside buy signal, which is exactly what happened here, which can take you to just under or just above the left side high. That's that 73.26 high of the 17th. And that's when you got to be careful. So now that's where we are. And if I pull up the 120-minute chart, we've made a peak E, very much above the 200-period exponential moving average, which is at 69. It is now testing the 9-period exponential moving average of 72.36. It went under it, and now it's bounced a little bit back again. This is exactly the area where if you were going to start adding a little bit more of a short position, this is probably the area. But I'm going to make two suggestions. One is if the XLV starts to pull back, then the 9-period exponential moving average of 70.68 becomes very important in the weekly chart because it's been above it for the entire week of last week. And so far, it hasn't made a new high, but it is acting very nicely. So that says to me, that's the cushion. So it's only about 2 points. No big deal. If you're going to be shorting, are you using puts or are you going to short it itself?
I got some puts when it was really close to the 73 area.
Okay.
I've had some of them at 71 too. So.
Okay.
Yeah.
So now this is a scenario I'm looking at. When I looked at the IBB last night, I said to myself, wait a minute. It looks to me like I have to be patient before I add anything else to the IBB on the short side, because fund managers now feel for the past, well, since late September, every time they've wanted to short this particular instrument, it's gone back to that period where it was just briefly a terrific short, and then sometimes intraday, or in this case, within a couple of days, it zipped right back to a slightly higher high, a recovery high. So now it's just above the 200-period moving average. Once you get to the 200-period moving average and you haven't been repelled, you've got to be prepared that there could be a little bit more of an upside. My thinking here is we've got maybe another 2 to 3 sessions of a real test of the IBB, the iShares NASDAQ Biotech ETF. And if it still remains quite solid, I have to step back and say, you know what? There is going to be further buying in the IBB until it gets to the point where the new buyers are in a position where they could be trapped because the next phase of the down move starts.
It's bumping up into a downtrend line from the very top. If you draw a downtrend line from the top at 479 and you go through, I think about 2 or 3 different points, it's touching that right now.
Well, let me just do this. I've already got the dashed line. Let me just extend it down. So my dashed line says we're very, very close to it.
Yeah.
Maybe I'm not 100% accurate because it's a dashed line. No, it's what it's saying. It says, now I normally would not take the top of that wick at 366.56 that was made on the 17th. I'd go to the body of the candle.
Okay.
Because it seems to me that the body of the candle, then you're right. And then what's happened is I go right to the 200-period moving average and it's closed above it. And as soon as that happens, I raise it and I go to the next level, which is the top of the candle. I like to use the body when I have other candles, and you can see that it gets really close to the candle of the 21st, the top of that candle. And that's suggesting to me to be conservative, you go from the very top down to the body of the candle, because the wick is a little too high up. Now I can go back to the wick, and that would concur with what I'm saying. 339 to 341. Hey, can you hold on? Because this is okay, thank you. And I hope Frank and Gloucester can hold on as well. We will be looking at BP as soon as we get back. Basil Chapman, we'll be right back. Dow's up 63.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So we are looking at XLV. We're back here. The Dow's up 56. S&P is unchanged. We're on with Mark and Fort Collins. Got a lineup waiting there. So let me do this. Mark, I think that I would do this in terms of the positions that you have for the XLV. You have the put position. I think that's going to be rewarding to you, but I wouldn't do anything right at this moment because there's still enough fund buying to say that because it's held quite well, there could be one little bit of a pop to the upside. We've seen that with other charts that have held very, very steadily against resistance on the left side with this arch formation, and then they suddenly have one quick pop to the upside. So I'm just going to say to you, I'd hold off doing anything extra right now. I see the signs that say that it is really close to pulling back, but pulling back at this particular point, I see a lot of support levels. It's at 72.50. It's down 37 cents, the XLV. I would give it a little bit of time, and I wouldn't overdo it right now. So that's the XLV, and I'll just quickly do the IYR, because that's the one we were looking at closely. And the IYR has just made a little bit of a double top here. It's almost the same thing, but at 76.26, 74.30s is very good support level. So what I'm looking at here is if these key support levels that are very close, a point or two away, start to break, then we're going to get a deeper correction. So let's hold it for day, and by this afternoon, I'll have much more information. I might include it in my newsletter as a brief kind of just a real quick survey and just say these are the parameters, or I'll do it tomorrow on the show. But in the meantime, I wouldn't be too aggressive because there's still some fun buying out there. So I hope that helps you. But I've got a double top in the IYR 120-minute chart. Looks like it's toppy, but it needs to take out the low of 74.65 to really say that it can go down to the 73.50s, the 200-period moving average. So I wouldn't get too aggressive right now. I see the signs, but there are little waves of buying that keep coming in. Hope that helps you some way.
Yeah, it does. And if you have time later, do the stocks or the SMHs again, if you would. I know we just got stopped out, but I took a short on that really close to the stop. So.
Okay. All right. Well, we'll watch that. I'll be looking at that closely. Thanks so much for calling.
Bye-bye.
Okay, good. Let's go to we've got Mark. Now we've got Frank in Gloucester, Massachusetts. Hi, Frank. How are you?
Pretty good. How you doing, Basil?
Very well, thank you.
Good. You helped me with BP last week, and I bought some. I started in. It got above its little swing high at 32. I've got to get back to my chart. Sorry. It got above its recent swing high, and you told me to call you back when it did. You also mentioned Exxon. I bought some of that, and I also got some Chevron, and both of those are doing better than BP. But if you could take a look at BP again, I'd appreciate it.
So, okay, very good. I'm so pleased that you did get into it. In fact, I was looking at it, I think last night. I didn't look at BP. I looked at Exxon and Chevron. I said, hey, wait a minute. I was just discussing that. How come I didn't get my subscribers into that when Frank called? So anyway, they've acted very well. But I had discussed it on the show and said that I was looking at in terms of the dividend and the capital gain, because I don't see any point in trying to just get dividends when the capital gain is really what you want, the combination of a dividend and a strong stock.
I agree.
We were looking at these, and now you've seen that you're starting to get that. So BP has resistance at 37.66, the 200-period moving average. It's at 37.11 right now. It's in leg C in the 120-minute chart, but it's the weekly chart that really impresses me because it isn't just breaking out. Of course, this is only the second day of the week, and not even that. We're only 2 hours into the second day. But at this particular point, you've got the MACD with a very wide beta, which is the distance between the faster moving average and the slow moving average. And you've got the stochastic already at 68%. I like that. They're kind of working together. So my impression right now is that BP is acting well. It should go to a D. And my looking at it right now, you remember I drew that pattern in that I said was a Chapman falling axe, and it's broken out, and it should have a one-to-one move to the upside. It's almost completed that one-to-one move. So in the meantime, back at the ranch, I think that the left side support that we've been looking at now would be at 38.06, just going step by step. So 37.66 might contain the price, but between 38.06 and then what most fund managers look at is the 200-period simple moving average, which is at 38.38. So I'm looking for a target in this particular move, and that's why we might be looking at the S&P and the Dow having some kind of support because of these integrated oils, and they have Exxon and Chevron. So I'm thinking that we should be able to go about a point to a point and a quarter higher in BP, and then you got to be a little careful to see how it consolidates. But I like what I'm seeing, and I think that XOM, as we go to the break, you're absolutely right. XOM, this looks like
better.
Hey, can you hold on a second? I just want to give you the letters on this. Can you hold on?
Sure, thank you. I will.
Okay. All right, we'll be back, and we'll be back with Frank and Scott straight after this break. And,
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we have we have Frank in Gloucester, Massachusetts. Excuse me. We're looking at BP, and BP is acting very well. I said I will also look at Exxon Mobil, XOM, trading up $1.68 at 86.96, up 1.99%. That's good. This is an alternate count. It's either brand new A or it's the old F. Now, what I do when I have a situation like this, I say, you can't panic, you can't do anything. If you're a long-term holder and you've actually held it all the way through and it went from the 104 to the 76 area, then down, 144.76 down to 66.55, then your obligation here is to take a little bit off because you're back to your recovery period. But if it's brand new and you've just started it, I would do nothing. I'd say that short term, there's a lot of evidence that we're getting a little bit overbought, but as far as I'm concerned, this looks very good. I would hold it, and I'd say let's look at it together again. Maybe Thursday's too early. Let's look at it on Monday and see what's happening. So CVX is exactly the same thing. I don't think I would add to this particular position. I'd say congratulations, you've got a really nice entry. Just give it a few days and let's see how it settles down, because the weekly chart on all of them is very good. So Frank, okay. I'm going to just say congratulations. I wouldn't do too much right now. Let's see how it holds on any pullback, and let's look at it and see whether it's something you want to add to or just exactly what to do in a few days' time.
Thanks a million, Basil.
Thank you very much for calling and congratulations. Nice entry point. So let's go to Scott in Safety Harbor. Scott, how are you?
Oh, fantastic, Basil. Couldn't be better. I mean, this thing with Gilead, it sounds like a broken record every time I call you, but I mean, it's it just is treating me so well. I have a quick question about that, but I also like to ask you about Alcoa. And the way I've got the chart on Gilead, I mean, it doesn't look like it because of all the articles, but it seems to me we're due for a pullback.
So what we're looking at, folks, is Gilead, G-I-L-D. This was one of the absolute great chart patterns for in the biotech sector. Gilead Sciences trading at 109, now it's 108.99. Someone heard you say, sure, selling. So it slipped down. It's down 60 cents. This is what I'm looking at. It's made a peak E in the Chapman wave in the 120-minute chart. That's always a tip-off to say, all right, let's see where you are in the lettering of the daily chart. Well, it turns out in the lettering of the daily chart, we spoke about this before, it had made a peak E. It hasn't broken that high bar. The MACD, and this is the thing to be a little careful of, is that the MACD is still showing strength. Stochastic still at 82%. And that's the reason I'm going to just blow this up a little bit so that you can see exactly what I'm talking about. It's gone sideways between the high that was made on the 27th at 111.11. I love those, all those ones. And then it comes back down and it goes to 105.94. That's almost a 6 point, it's about a one, what is that, 6 points? So yeah, that's about 3.5%, 4% pullback. And then what happens is it holds the 9-period moving average and it just goes sideways. I'm kind of with you in this regard. Let me show you why. If you look at Celgene in the same group, it's gone to a leg E, which might be an alternate count, but it's in an E. It's holding beautifully, and it's closer to the high, but it is held in a different pattern. It's a stair-step pattern that says, I'm steadily making slightly higher highs, and so far, the weakness hasn't shown up because I'm not under the 9-period moving average. If I look at BIIB, which is the Biogen IDEC, which the monthly chart made a 480 high, and then it's slumped down to 254 round number. It's still in leg C, so it's showing a little bit of strength, and that's what I think I'm seeing in the IBB. But as far as Gilead is concerned, I think it's really close, and that's kind of what I was saying to Mark earlier. I think we're really close to some kind of a pullback again, but at the same time, I haven't got the signs technically.
Well, I think you're with me in the same camp of we're not talking about a $10 pullback. I think you agree it's a couple dollar pullback. I call it recalibration, and I think it's become now, instead of the $100 stock or 110 stock, I think we're at like 106 to 110. I see it kind of going between those two.
So 106.01 exactly is the 200-period exponential moving average, and the low that was made the other day was 105.94. So I was going to say to you, the consolidation might be that it goes sideways, but I'm also looking to see how each bout of buying comes into the various healthcare sector stocks. Because
yeah, I agree, and I wish it might not be the thing for you, but sometime I wish Tom could talk some afternoon about how stocks like VRX, Valiant Pharmaceuticals, things that biotechs that have all kinds of problems, how can they be a $100 stock and Gilead be a $100 stock? There's no comparison. There's one company that's just so much stronger in every way than the other.
That is a fabulous question, and really what
that's the question people ask me most often because they know I'm an avid day trader, and I can't ever answer them.
Yeah, it's very difficult to do. For instance, let me do this right now. How can a Disney, which is look at this, Disney coming back strongly, it's up $1.19. How can Disney be close to all-time highs at 116.23? This is a stock that's been a public stock. I wonder if I can squeeze it here. Yeah, this is a public stock going back, 95. No, it's even before 90. Come on.
A long time,
This is a public stock that goes back to, 1960, 68 or something. Let me just see when. So, okay, February of 2000, somewhere around February of 1968, okay? So here's a stock that's traveling at 116.21, and all of a sudden you say, wait a minute, this is a company that has had decades and decades to build and build and build as a company. And now let's go to, say, an Amazon, which is trading at...
Yeah,
well,
Amazon.
I didn't want Amazon. I just wanted a stock that's in the same price category that LinkedIn, let's say LinkedIn, I can't even remember what LinkedIn price is, LNKD, there, is at 246, double.
Right.
So you say, well, what's the relationship? Why would a LinkedIn, which has only been public since 2011...
It's a worthless company, by the way, and I'm involved with many business people, and they try to get their stuff away from that. It does nobody any good. It just causes you a mess of nonsense on the Internet.
But now let's just go back. All right, so now you've said that. Now let's just go back to the price and say 246 is up 591 today. Because it is in the sector called social media, the premium starts off at a base level that is the Disney level, and then it accelerates from there. So what we're looking at is when you're looking at price movement. That's why years ago I remember listening to Kramer talk about stocks, and he was saying this is an inexpensive stock. Get that. Just remember, a low-price stock can be very expensive, and a Google can be very inexpensive. And I thought, hey, that's nicely put. Very simple. It's saying that a low price doesn't mean to say it's a cheap stock. So what I'm looking at here is when you look at something like a social media, you've got to factor in the so-called sexiness of the thing that makes it a base level of 100 and something.
You know, it's funny you mentioned Google, because I remember one day Google and Priceline were both about 500 and change, and I thought, wait a minute, Priceline, they're selling hotel rooms on the Internet, and Google is the Internet. What's wrong with this picture?
Right. So now we've got Priceline at 1464, and you've got Google. Google's trading at 716.
Yeah, it finally moved up after a couple of years here, but it was dead in the water for a while. And I didn't buy it because it was so expensive, Basil. I know what you're going to say. It's really not, because just buy less of it. But it never moved. Then all of a sudden, there it goes.
So that's something that one has to factor in. So these are the imponderables. These are the things you could spend days and days trying to assess.
Is it really public perception? And that's what I've been trading on for 3 years, really.
It has to do with, there are fundamentals involved, but the price itself very often has to do with other factors. So I always get out of the way of that, and I just say, the price is the price, let's deal with it. So now what I'm looking at, so in terms of Gilead, I think the upside is a little bit limited here, but in the meantime, I also think, just for the moment, that the downside is limited. So you've got maybe 1.5 points on the upside, maybe, but you've also got good support at 2 points down. So at this particular point, I'm looking at the IBB sector and the individual stocks and saying, let this just run its course. You've got a couple of stocks that are still showing strength. Let them finish their upward move, and then we'll see if the IBB is going to come down. But in the meantime, there is a chance. I cannot exclude the chance that IBB made a significant bottom at 285, and it's starting a brand new route to the upside. I don't think so, but I have to put that into the pot. Actually, 284 was the round number low, if you remember. So I have to consider that there is a chance that we're looking at more than just a bounce in the IBB. We saw that last October. My thinking, actually, from the monthly charts is that most of the IBB stocks have made what I call hat-trick tops. They will not see the recent highs.
I feel like I'm working for the company PR sometimes, because I try to talk people I know out of buying these biotechs I have looked at some of these things, and they have no sales at all. And we saw that in $60, $70 biotechs, and I'm thinking, I can't get into their heads. They don't.
Well, we saw that in 2000 in the bubble with the high tech, and now we've got the biotech. So I think we're looking at a relationship here of maybe we can call it a bubble. Although I didn't really see a bubble in this last move up in the biotechs. I saw extreme overbuying, but the bubble I think is in the real estate, in the payments of their personnel.
Well, you
there,
know, the way I
there's a
explain it
bubble.
to people is this, and you'll relate to this. You can have a store that sells just tennis rackets. If something happens to tennis, they're in trouble. Well, Gilead is like a sports store. They sell everything. They have so many things in the product line that they can afford hits here and there and still maintain. But yet people still want to buy stock in that tennis store only. And if one thing goes wrong, as you know, in these small biotechs, I mean, they literally go to zero.
They just tanked. They just collapsed. I can't remember. There was a stock just recently.
I can't remember the name of it. It
75% or something. You can't deal with that. It's just unless it's part of a tiny little portion of your portfolio. That is a hit that's really hard to come back.
I think that some of these guys think that they're going to get bought out by somebody one day, and they're going to quadruple their money, and it's
always
a long
the case,
shot.
right?
Another quick question, Basil.
So I think you're right. So you're sort of stepping aside a little bit in Gilead, waiting for a pullback, and I'd agree. I right now I think it's
not a big one, like $1. Could you check on Alcoa very quickly?
All right, we'll do that because actually that was one that was on my list this morning. Didn't take it, and it's doing beautifully. It's up 32 cents at $9.48. Leg B in the daily chart. Now this is going to be very interesting.
Should I predict 11 again?
Well, you see, this is the pattern that we're looking at of these big moves off the bottom and then the collapse is a little disturbing in that the last move up to $11.18.
Not disturbing if you can predict the bottom.
Oh, well, the bottom actually is a base building bottom, and I'm intrigued with this because it's going into the cyclical stocks that I've been looking at favorably. So I would suggest to you that there's a good chance that the 862 low of the 27th of October down to the low that we saw of 797 is attempting to have rising lows, but we haven't. It depends on this move now. Can it be a rising high to go to 1140? That's the big question. But
That's what I'm looking at, around 10. My number was 1040, and I got in this morning a little over 9, and I wished I got in yesterday, of course. But I get scared when things are really too low, like when it was at that 7 number. It just seemed to have, how the momentum goes.
We spoke about
that downward surge,
So, okay, I think that, Alcoa is acting well. I think you got him perfectly. The way it swings and then stops is going to be the big issue. And what I'm looking at is if in the next the entire month of November, if Alcoa does not take out the low that was made, and this is going to be a big question, because as a heavy-duty cyclical, if 862 is not taken out over the next 2-3 weeks, let's just say 2-3 weeks, that's going to be a very good sign. That's going to suggest that something's happening in the automobile sector and all the sectors that use the very heavy-duty, the steel. I mean, this is what we got to look at. We had bought AK Steel. We had wanted to buy it, just missed it by a couple of pennies.
One more thing before I could go. I really wish that you and Tom would do a show together about the Trump effect and exactly what you predict is going to happen if Donald Trump gets in there. A lot of people are saying
I'll be doing that in the next couple of weeks, as I always do. I talk about politics and I talk about what I look at in my Trends Watch section to see who and where what the country's ready for, and I'll talk about that very soon. I'm not going to do it now because it's just there are other things that I'm doing, but I will get to it.
20,000 in the Dow right off the bat, then it'll settle down. But we're going to hit 20,000. People are going to get excited and they're going to start doing business.
Yeah, it's from your lips to the market's ears. Thanks for calling. Always appreciate it.
Thank you so much, Basil.
Thank you very much. That's Scott, and we were talking about many, many things. I'll be right back. Dow's up 91, S&P's up 4.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back. So I wanted to show that 10-minute chart. So the 10-minute chart went to peak A, B, C, D. This is the E-minis. It went to D, pulls back, and then bop, goes right through the 2100.00 recent high. That says that there is still internal strength. Doesn't mean to say it needs to hold because it's a leg E, but it does say that you've broken that, and that particular metric that I use, the round number, 2100, is important, but it has a different importance now because it says it's just one of others in that area. So we're looking at this, and my thinking was that 2102 to 2105 should offer a very strong resistance. If it did get up above the 2100 level, hey, let's see. But look at the SLX. This is the steel market vector steel index. That is nice action. And look, when you're talking trend lines, you have a trend line that says it could go to the 10th of November to retest the previous high. And that high was around about the 27 area, and so 2505. Number one. And number two is, here's the resistance level. Let me take it once again. I'm going to use the candle, the body of the candle, rather than just the wick. And that says the first, on this particular great dash trend line, the resistance is at 25.48, around about 25.40s, let's say. So this is going to be very important. Now, there's another factor that I have to put into the pie, that the bonds have been pulling back. And bonds are now, the TLT's at 121.35. If there was going to be a very serious sell-off in this market, my thinking is that money would flow back into bonds. So let's talk about the bonds itself. 155 and 3/30 seconds down, a full 21.30 seconds, with very strong support that must hold, and I don't know if it's going to, right here at 154. Let's call it 155 to 154.5 on this coral-colored 200-period moving average support. NACD is not good. Stochastic's way down at 14%. I'm looking at this and I'm saying, wait a minute. Is this telling me that we're in another phase that bond yields are going to go a little bit higher, impacting, say, the HGX, how are we doing for time? Okay, we're doing okay. Which has made a peak D, right there, D, okay? But it hasn't pulled back much, it's holding sideways. And let me just look at Toll Brothers, TOL, because they are impacted by interest rates to a large extent. Toll just kind of stuck there, and Lennar just kind of stuck there. Yeah, so that's gone to a C and a D, and it's pulling back from the peak D. That's Lennar. Look, there's your C, and there's your D. Always look for Ds in the Chapman wave methodology. That's where you expect. There's your previous D way up there. Now you got another D lower down. So this is going to be a very important period, because if we are in this accelerated move to the upside, it might start to gather momentum by grabbing those weaker areas that were weak, have had a big pullback, and rotate into and out of them for a little while. So that gives you support. That's number one. Number two, although we went short a couple of things today, the two stocks that we, let me just double check, that we are in position now. Yesterday, I believe it was, 3 days ago, we shorted one. That is a really important one as part of the economy. It's pulling back. And we got one this morning, and it is also pulling back. Oh, it's only down 3 points, but hey, 3 points for this stock. It doesn't often do that. So I'm looking at this and I'm saying, keep your methodology intact. If you're looking at stocks that are potentially on the short side, I wouldn't get too aggressive, but I would short them. I'd use my discipline. And on the long side, if it's looking good, I'd be quite prepared to buy it. Right at this particular moment, I just wouldn't overdo the percentage of the portfolio on either side. I'd try to be well balanced right now. So thanks for being here. I'll be back later on this afternoon with Tom O'Brien. Have a great day, and I'll be back tomorrow. Check out my opening call. I think you'll find it very interesting. Thanks for being here. Stay tuned for
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.